Hey Credit Warriors, and welcome to this rare stock market video on our channel. And today we are going to be talking about why the stock of Tesla, the electric car and skimpy shorts maker, could soar after their earnings call on Wednesday. And at the end of this video, I'm actually going to take you through my portfolio. I'm going to show you exactly how much money I've made on Tesla stock and explain my strategy, etc. Now, Tesla has been on a wild ride this year. Within the last 6 months, the stock has seen a low of $350 and a high of $1,700. And it's now the world's most valuable car maker with a market cap of almost $300 billion. Now, the stock price was steadily climbing earlier this year. It's been climbing for some time, but within the last month is when it really exploded. Now, why would a stock price explode? Well, that's simple, because more people are buying it, and that thus drives the price up. Now, a lot of this has to do with what they call short squeeze. Tesla is the most shorted stock in history, and when the price starts to rise, you may get one group of short sellers who then have to cover their positions and actually buy the stock. And because they buy it, that drives the price up a little more. And another group of short sellers, they then have to buy it as well, and that drives the price up even more. Okay, this is called short squeeze. From this chart, you can see the percentage of Tesla shares being shorted in red is declining as the stock price is rising. Short sellers are covering their positions. But there is another reason why the price of Tesla stock is rising. And no, I'm not talking about FOMO or fear of missing out. Let's just explain that quickly. So basically, as the price rises and people see that, more and more people jump in and buy the stock, hoping that they're not too late to catch some of that rally. Good old Robinhood investors helping us with that final push once all the serious investors are ready to take their profits. But no, that's not what I'm talking about. It has to do with Tesla's earnings call on Wednesday. Do you remember Tesla's last earnings call during the lockdown?
If somebody wants to stay in their house, that's great. They should be allowed to stay in their house and they should not be compelled to leave. But to say that they cannot leave their house and they will be arrested if they do, this is fascist. This is not democratic. This is not freedom. Give people back their goddamn freedom.
Well, apart from outlandish statements by Elon Musk intended to grab media attention, they do actually report profits and other information on these earnings calls. And guess what? Tesla has been profitable for the past 3 quarters. Now, if it can be profitable for one more quarter, that is 4 quarters in a row. And that is the last hurdle Tesla needs to pass to enter the S&P 500, okay? The index of the US's 500 most valuable companies. Now, the theory is that once a stock is included in the S&P 500, many index funds and ETFs will have to buy the stock, okay? Because they track the entire fund, so they have to have a certain percentage of it in Tesla stock. So many funds will start buying a small slice of it. So people with pensions and 401ks, etc., will now own a very small amount of Tesla stock in their portfolio, in their whole fund. So your grandma, she won't know the difference between a Tesla and a Nikola, but she'll own some of Tesla's stock. Now, when Amazon made it into the S&P 500, the stock rose 5% on the announcement. Now, at Tesla's current price of $1,500, 5% would be a $75 gain for the stock if that happened. And then most likely it would continue to rise as funds started buying the stock, then investors with FOMO started buying it, and then more and more short sellers got squeezed out. But can Tesla do it? Well, some analysts don't think so. The company's Fremont, California factory was closed for half of the quarter due to a lockdown order. So now Musk's outrage on the earnings call makes more sense, right? Just one more quarter of profit and we can get into the S&P 500. Damn you, Governor Newsom. Give people back their goddamn freedom so they can make cars and sell them for a profit and get into the S&P 500. But there are some analysts who are more optimistic. And although Tesla vehicle deliveries were down slightly since the previous quarter, they did actually still beat analysts' expectations. So I would say that there is still a chance that they might be profitable. You know, with Tesla, there's always surprises.
Sure? Yeah. Oh my fucking God. Well, maybe that was a little too hard.
So don't completely rule it out. And if they don't turn a profit, you know what? They may actually get added to the S&P 500 anyway. Bloomberg analysts released a note claiming just that, citing the committee that oversees the S&P 500, quote, reserves the right to make exceptions when applying the methodology if the need arises. So when would Tesla be added to the S&P 500? Well, to be honest, it's pretty vague. Technically, it's whenever the committee makes the decision, all right? You know, whenever there's a committee in charge of anything, it always takes ages. Like, that's the reason I haven't uploaded a video for like a week, because the committee was making the decision whether to upload or not. No, I'm just kidding. Actually, I was in hospital having surgery on an old injury. But don't worry, guys, it's fine. I spent 4th of July there, got an amazing view of the fireworks. Anyway, I'll tell you all about that in the future. Moving on. Now let's actually show you my position in Tesla. I'll show you exactly how much I've earned. Now guys, you're not gonna see like tens of thousands or millions of dollars, but you know, this is quite a realistic position that, you know, the average person would have. It's part of my $20,000 stock portfolio. So let's go in there and check it out. Now, so you can see here in my Charles Schwab account, I've made $3,755 gain on the 3 shares that I still hold of Tesla, but that's not the whole story, okay? So I first bought 2 shares of Tesla in 2018 for $294 per share. Then the whole taking Tesla private, funding secured tweet happened and the stock price shot up. So I sold those shares and made a total of $743, taking home $149 in profit. I thought that was good back then, you know, I was pretty pleased with myself. But then Elon Musk got sued by the SEC, the stock price went down, so I started buying Tesla again. I bought back in at several price points and I got an average price per share or cost basis of $250, and I ended up with 4 shares in my account. When the Tesla price shot up to $1,400, I sold 1 share, which covered all of the money I've invested in Tesla stock, which is $1,000 for 4 shares, and it gave me a $400 profit on top of that. So if you include that almost $400 profit with my earlier sale of Tesla stock back in 2018, I now have $546 worth of realized gains from selling Tesla stock, but I still have 3 shares of Tesla sitting in my account, which by my logic have a cost basis of 0 now, because I've made back all of the money I've spent on Tesla stock through selling just that 1 share. So I have $4,500 in unrealized gains from all the shares I currently own. And what is more, those shares count as long-term investments from a tax point of view, so I will not be charged at the short-term capital gains rates, which are the same as income tax rates. No, I will be charged at the long-term capital gains rates, which are 0, 15, or a maximum of 20%, depending on how much you earn overall. So am I going to sell? Well, I'm certainly going to hold for now and see what happens on the earnings call. If the stock price goes down to below $1,000, I'll probably buy back in. If it goes up, maybe it hits 2,000 or so, I think I might just cash it all out and, you know, add it to the money that I'm going to invest in my first rental property, which I'm looking to buy towards the end of this year. So there you have it, guys. That is my strategy, and that's also what's going on with Tesla. Get your popcorn ready for the earnings call this Wednesday. I think it's going to be a wild ride. And if you do want to monitor Tesla's stock price on Wednesday, of course, the earnings call is after hours, so you know, the stock will change after hours depending on what they report on the call. A great way to do that is through Webull, which gives you real-time info on after hours. It also supports after hours trading. And if you download the app and set up an account and invest $100 in your account, obviously that's your money that you can use it to, you know, trade stocks or, you know, take it out in the future. You can get 2 free stocks just for doing that, setting up an account and investing $100. One of those stocks may be valued up to $1,400. So if you're interested in the investing app Webull, very similar to Robinhood, also commission free, do check out the link. It's in the description below. So guys, leave me a comment. What do you think about Tesla? Maybe it helps the YouTube algorithm, maybe it doesn't. I don't know, but I enjoy reading all your comments anyway. Please subscribe if you're new, and we'll see you next time. Bye-bye.